New York University professor Nouriel Roubini says a recovery in the world's largest economy is at least a year away. Tullett Prebon economist Lena Komaleva says global action is still needed to kickstart growth. And Investec economist David Page says interbank lending data will provide investors with the first signs of a turnaround. We speak with Roubini, Komaleva and Page about their outlook for a year that may see the first simultaneous recession in the US, Europe and Japan since World War II. With the economic focus for the week of December 22nd, I'm Lucy Meakin.
This recession is going to be most severe in the United States, where economic growth is not going to recover until 2010. But we'll also have a recession in the Eurozone, in the UK, in the rest of Europe, in Japan, in Canada, in the other advanced economies. And right now there is a sharp slowdown of growth also in emerging market economies, and effectively, if they're going to grow well below potential, that's also a hard landing for them. So it's going to be a severe global recession and deflationary forces as the excess supply of goods relative to falling demand is going to put down pressure on prices and inflation.
If we take 2008 as the template, of course, the global economy has been hemorrhaging. We're seeing widespread collateral damage with equity prices falling, credit falling, house prices falling, and as a result, the monetary transmission mechanism is broken. Rate cuts are not being passed on in the form of increased credit flows to the real economy. Major financial markets are broken. Financial institutions are in need of constant liquidity support from central banks, who have become the lender of last resort, and constant capital support from governments, who have become the capital provider of last resort. So I think with this in mind, 2009 has got to be the year that global policy is mobilized in a concerted fashion across the fiscal, monetary and regulatory front in order to not just stabilize financial institutions, but to bring capital markets back.
The most important indicator as we move into 2009 is going to be looking at interbank lending and interbank spreads. That's going to be one of the key things that tells us whether or not the measures that were put in place at the back end of this year are actually starting to bear fruit and freeing up the credit crisis. That being the case, then we should start to see the powerful stimulus that's been put in place actually gaining traction on the economy and some recovery. Once we've started to look at that, we'll then be looking to see if it actually is gaining traction in the real economy, and so for that we'll be looking at some of the more forward-looking surveys. We've got things like the ZEW survey from Germany, from the States, we look at the ISM, the PMIs are very important as well. And they should all start to pick up from what are incredibly depressed levels at the end of 2008. So we will be looking for those as forward-looking indicators. We'll then be looking at some reaction from households as well. Consumers across the globe are likely to have to start picking up or stop spending less as they currently are. And those things coming together, then we should start to see GDP pick up.
Looking to the week ahead, final revisions to US gross domestic product are expected to confirm the world's largest economy shrank 0.5% in the third quarter. Other releases include consumer confidence and spending, durable goods orders, and new and existing home sales. The UK sees its final revised GDP for the third quarter. The Euro region publishes industrial orders, and Japan reports production and consumer price data. Interest rate decisions in the week are expected from Hungary, Serbia, Poland, and Egypt. That's the Economic Focus. I'm Lucy Meakin.
There's more television and radio news at Bloomberg.com. Stream it live. Download it to your iPod or desktop.